Hi again, this is Mary Jane from Freedom Financial Solutions with another exciting episode of Setting Up Your Self-Managed Super Fund. And today we're going to be talking about what we call is rollover instructions. Okay, I'll share the screen so that we can see what we're talking about. So first of all, you have found our website, freedomffs.com.au, and you've ordered an SMSF using our order form here. Okay, there's also paperwork and management, commonly asked questions, which we will open up to have a look at. But let's open the order form. Okay, so the order form has got all this information. Now, if you've watched the filling in order form video, it doesn't cover this section because rollover instructions is a new feature on our order form. So first of all, let's go to the section of the order form that says existing super to be rolled over. This is where you put the name in, the number, and you tell us your rollover instructions. Now, a rollover is where what the technical term for moving, transferring the money from your existing retail super fund, which is called an APRA fund, an Australian Prudential Regulatory Authority fund, like Australian Super and CBUS and Q Super and all those Host Plus, Rest, Aware, Art, those ones. Rolling over is transferring the money from that fund into your self-managed super fund. That is called a rollover. Now, the rollover instructions is what we need from you in writing to tell us how much to transfer. If you want 100%, you click yes, 100%. Easy peasy. However, if you want to keep some money in your existing super fund for various reasons, a big reason is insurance. If you have active insurance in your current super fund, then you might want to keep a minimum amount in that fund so that your insurance remains active. Now, what we need you to do here is calculate how much you need to leave in your fund and put in the amount that remains there. So let's say your fund has $200,000 in it. There we go, $200,000. And let's say your outgoing super fund requires you to keep $10,000 minimum in their fund to keep your insurance active. So in here, you would write $190,000. The minimum is generally around $6,000, but we are not going to tell you exactly what that is because sometimes the outgoing super funds change their numbers. So the best thing for you to do is call your current super fund and say, what is the minimum I need to keep in my fund to keep my insurance active? If they say $6,000, then we would recommend keeping $6,500 in there just to make sure that in case they take any fees out that you don't know about, you've got that minimum balance preserved. Similarly, if they say it's $10,000, you might actually want to keep $15,000 or $12,000. Take the minimum amount off your total balance and put that remaining number in here. And that tells us the exact amount that you would like us to roll over from your existing super fund into your SMSF. So that's what a rollover is. But what I'm also talking about today is when you're calling your outgoing super fund, before you do the order, you might also want to just check a few other things. So for example, do you have a defined benefit fund? What does that mean? A defined benefit fund is different to a normal fund, and instead of it being your return being based on investment return, your organization might decide on its own formula. And as it says here, a lot of the public sector or older public sector funds like PSS, especially if you're in Canberra, they are defined benefits. And typically we are unable to roll over from a defined benefit. Now, some funds will allow you to change your defined benefit and move it into an accumulation fund. Accumulation fund is what we can roll over. So you'll need to check with your outgoing super fund if there are any limitations to you rolling over. Is it a defined benefit? Is there a compulsory preservation age limit? Even if there are funds that we know we have rolled over, sometimes your individual agreement with them, you may have agreed to a compulsory preservation age limit. It might be 55, it might be 60. We don't know, and we can't speak to your outgoing super funds just yet about your details. So you will have to call them and ask them. So you can ask them, is there a compulsory preservation age limit on my fund? The other question is there an untaxed element? So for example, most of the time, superannuation is taxed at 15% when it goes into the fund. Sometimes it's not. It's going to be taxed when it leaves the fund, which means that when you roll over, when you transfer it from your outgoing fund into your SMSF, there will be 15% tax payable. Now, you will have to pay that at some stage. Whether it's later, like if you kept it in your existing retail fund, you would have to pay it at some stage later. So you're really just shifting the timing of the payment if you're moving it now from your outgoing fund into an SMSF. So please check your current super setup. Sometimes you can just check it in the portal online. Other times you might actually need to call your fund. Now, the other thing is if you've made personal contributions and are planning to get a tax deduction for those, you will have to lodge a notice of intent. Now, when we request the rollover, normally your super fund will send you a letter or a notice saying, you've made personal contributions. Are you planning on lodging a valid notice of intent? This is what the notice looks like here. Here it is. Catherine talks about this in more detail in her most recent videos. So watch those as well. If you think you have made personal super contributions, the timing on putting this form in is quite crucial. So I do recommend, if you think you've got this, reaching out after you've watched Catherine's videos about this, about making contributions and also the technical details. She's got 2 technical detail videos, just to make sure before we request a rollover that you have done everything you needed to do. So the rollover instructions here. So before we roll over, we get this in writing from you. We like to get it now at the order form stage. You can change your mind about 100% yes or no up until the bank, you've signed the legal documents is when we ask for it to be finalised, which is before the bank account. So we do that. Now, if you've got more questions here, oops, where is it? Here on our SMSF setup order form, paperwork and management, you can go to here and click on paperwork and management and scroll down to where it talks about rollover instructions. There it is. So it answers lots of questions here. In fact, everything that I have covered already, it's actually all covered in there as well in case you can't remember or you want to refer to something quickly. So I hope that covers everything to do with rollover instructions, and looking forward to helping you create your self-managed super fund to take more direct control over your superannuation and your retirement funds. Okay, bye for now.